Welcome everyone. I just want to recap on a couple of points that I made in the Traders Round Table today. The discussion point was on how to do your preparation, do sufficient preparation to keep yourself in the best position to capture at least some intraday points. And of course, if you are a swing trader, then just to look at the bigger picture and limit the number of trades and focus yourself in such a way that you're getting in and out of the markets in higher probability situations. So what I'm looking at here is the Dow on the daily chart, and you can see the preparation I've done here includes this support line here, picking up this low, this weekly trend line, this weekly channel I should say, and of course just monitoring where the 50 and the that's the 50 EMA and the 200 EMA down here. Okay, so what I've got lined up as far as the bulls are concerned on this chart is this key area here of 17,030 area roughly. Well, that ticks a lot of boxes. It's the low of December, it's the bottom of the channel, and it's the beginning of the week, and so we look as at the moment with an hour to go into the trading, we look as if we've got the bulls coming in here. So we close somewhere around this area, 17,170, 200. We've got a chance of holding and forming a base down here and then pushing back into at least 17.5. However, the overriding trend at the moment is on a weekly level is down on the basis that all these highs have been sold into, and whenever there was a bounce off of the lows, it just pulled back into resistance and dropped. So we've got this continual downtrend. So if you intraday traders, the winners on the intraday level would have been those who were just patiently shorting any of these resistance areas up here. Alright, but I think it's if you've got some of these levels, some of these drops, and you are looking to see if this market can hold, then I think picking off a little, taking a small position on a low level like that and holding it and seeing where we close is legitimate, because were we to close above this level here, or are we to close above that level today, that could give us at least a little bit of a bounce. Okay, what do I think is going to happen? I think that this market is struggling at these highs, and I think we've got non-farm payroll on Friday, so we could very easily end up in a very narrow range this week. And then when we get non-farm payroll on Friday, if we can close above, at least assuming we don't close above 250 already, then I think we can push back up. So I think that's what we're seeing here, potentially early preparation for the date at the end of the week. But I think a proper move back down to this 50%, and ducking under the 17,000 would not be unusual in my book, and we could even see ourselves coming under the 50% and getting this, shaking out some weak hands and potentially getting some bulls involved in getting back to the upside of this channel. Okay, so bottom line is, if you are an intraday trader, you might want to pick off these massive support levels and see where we close. Otherwise, I would suggest you steer clear and see where we wait until we either close above 250 or we close under 17,000, and then that should give us the direction. Same applies to this one here. This has been a fantastically great trending chart. If I really pan back out of this, you can see how this one was just amazing through 2013, paused into October 2013, ran up, paused in September, October last year and ran up. This is a very strong trending pair. I think it's actually got a long way to go. So again, if you look at the major support levels in this one, you can see I've got marked this 192, and we're currently 70 plus points above that. So simple support and resistance is quite often all you need, nothing more complicated than that. If you pan back from this chart, if I put a line right across 192, you can see in the back end of 2014 we actually failed at this level. So this was resistance and a bit of a wall up here from which we failed. Now we did this nice W bottom, pushed back into 195 and come back down to 192, which is now support. And here we are, potentially going to challenge for 194, 195. Pan back to the weekly, and you see two very strong weeks. This is a fib area, 61.8 fib area, and with the potential to move to 196, 197, and in the not too distant future 200. Alright, this fell away a lot after the credit crunch. So it wasn't that long ago when this was 271. So I think there's plenty of scope for that to push. And when you get a lovely chart with a predictable story, a high probability story in that one, it's well worth locking into and picking off some lows, even when the daily is looking a little extended, a little high. Okay, so that's a low risk way of intraday trading and limiting yourself to just the most liquid charts, the best trending charts. Okay, so let's look at some other markets. This is gold, and it's struggling up here with 13.6 is the top of, or getting close to, a major resistance area in this what is potentially a big box. And we've got this 8 and the 50 EMA and the 200 EMA crossing down here. So it could be, if we get another, that's a hangman bar to me, which generally creates a bit of a downdraft. In other words, the conviction of the bulls at the highs is very weak. So it dropped, the bulls bought it, they picked it up, but they weren't able to push it above the resistance area, 1285. So for me, that's still hanging and spinning and not able to penetrate and maintain high levels, and therefore I think could need a slightly deeper pullback before that's ready to go, and 1250 will be the obvious major support level for that one, were that to were that bar to drag that down. Moving on, the other charts, this is US dollar Swissy, weak to sideways. I think this needs a push down to 116 at least, if not this massive trend line here. But with non-farm payroll coming up, we may find we get a close the first half of the week or on Friday, assuming non-farm payroll is positive and the market likes non-farm payroll. I don't think that will start to push back up until we've had a dip. I think this is, if this is a bullish consolidation, then we had one dip over the weekend, but on the Sunday Open, but I think another dip may be required to get everybody interested in that. Otherwise, that price is a little bit too high and stagnant, and a good old-fashioned plunge will get people interested in that, get traders interested. Okay, so pound US dollar is sideways to weak. If this is a bearish consolidation, it might just nip up to 152 before it drops. Otherwise, leave it alone. The actual close on a pound yen is similar to the US dollar yen. Although don't forget, with with an Asian related pair like that, that could just pick up into the start of the Asian session before the bar closes and create a move. You've only got to close above 35 points above that for that to be back very much in the bull zone, in the buy zone. But in the meantime, that is behaving quite weak. Okay, Euro US sideways to weak, and what else have we got? Aussie US. We've got rates tonight. Sorry, should have said that. We've got rate decision tonight in the Aussie. We're looking for a rate cut following the CAD, the drop in the rates in the Canadian dollar. So let's see how that one occurs. It's always best if you're not in a trade like that, then just to steer clear. And that's why I would suggest if you're a day trader, you might want to take your 70 points if you did take the low of pound Aussie dollar, or just ramp your stop up to lock in some profits or break even to see if that can push up on news of a rate cut. Otherwise, steer clear. Okay, and we do know from the Swissy that rate cuts can be very violent. So if you haven't got a buffer or you're at all unsure about what that might do, then just steer well clear. Plenty of opportunity. If you've got a sharp move one way or the other, there's always another opportunity to trade it. So you don't have to be in on every move. Right, quick look at oil and then we'll finish up. Oil's had another good day. So we pull back into that box and we're pushing up into 50. Very slow after, let me see, what time was that? Yeah, once we had a move a couple of hours after or 3 hours after the pit opens, and it pretty much stayed static there, so at least it's holding. So we could see some further upside, could see a full push into 53, 54, 55 before that could return to its downtrend. Okay, I hope that helps, and speak to you soon.